This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jeffrey Kamys, CEO at Inherent Wealth Fund. Inherent Wealth Fund is a registered investment advisor focused on thematic and sector-specific investing. Jeffrey, thank you for joining us.
Hey, thanks for having me again, Hall.
Great. So where are you calling from today?
I'm actually in Vegas. I have a trip. I'm involved in this sports betting and gaming ETF. I try to go twice a month because I want to see what's going on the ground floor. And all I can tell you is for investors or people interested in the space, it's very crowded here. And things are going well in Vegas despite the recession. And in terms of recession proof, this is an industry that usually lasts and does well, actually better in those kind of economies. So sports betting and the casino gaming sector is alive and well right now, I can tell you.
Well, great. Well, let's kick off a little bit with your background. What did you do before founding Inherent Wealth Fund?
So I started when I was younger. I was an athlete. I played a lot of sports. I hurt my shoulder. I wanted to take part in sports. So I created one of the very first fantasy sports sites when I was like 23, 24. It was called Dr. Stats at the time. I ran that for about 17, 18 years. It was a lot of writing. We were doing I was doing something like 400 player evaluations, especially for football. During the football season, NFL season, I'd be doing 300 and 400 player evaluations a week. So it got kind of draining, but it was a great business. Got to work from home for myself and made a nice living. Got to be at home, raise my kids. So it worked out kind of perfectly at that time. And I really love the industry. And now it's kind of grown into, fast forward into this sports betting, analyzing stocks. It's very similar.
Well, great. And so what's your advice for people working in this space? What do you tell them to do before they jump in?
In investment advisement or in terms of general entrepreneurial kind of lifestyle?
Investing in the sports space, the sports betting space in particular.
Well, one of the things that's happening is, it's a nascent kind of investment kind of concept because, a lot of these companies are very new. And so what you get a lot, and there were 3 this week, there's a lot of merger and acquisition activity. And I would say there's some winners and some losers. One of the reasons a fund like mine makes sense if you're interested in investing in this space is that you get the diversification without the single stock risk. The stocks will win, some will win, most will win, many will lose. And that's just like the stock market in general anyway. I mean, we all probably took some hits in those bank stocks in the last 2 or 3 months, but some are going to lose and some are going to win. And you're going to get diversification by being in a fund like mine because we hold 30 to 35 holdings, and rather than just betting on one company, you get the ability to get diversification and get the cumulative annual growth rate, which is somewhere in between 13 and 15% currently per year. So that's really the concept behind it and a fund like mine.
Well, great. And so how do you see the state of investing in this sector evolving? Where do you see it going at this point?
It's still very new. It's, people are still learning it. I get questions all the time. Do you make bets with my money? I'm like, no, we're investing in companies that are traded on the stock markets and global markets all over the U.S. and all over the world. And, it's companies that people know and understand. Some of them, Caesars, Wynn, Las Vegas Sands are companies people have heard of, but there's new companies. There's a company, essentially, people know the name FanDuel, but it's actually owned by Flutter, which is a London and Ireland company that's actually going to go public at some point here in the next probably 3 to 6 months, and they're going to have a U.S. ticker. I advised them actually I told them they should go public as FanDuel because people don't know who Flutter really is. Flutter just means make a bet. It's like having a flutter. I don't know if you knew the term, but I ask people that because most people don't understand what the term means, but it's a British term for like making a bet. It's like, oh, I'm going to go have a flutter. So that would be you placing a bet on a horse race or a game. And but there's new companies that are in this industry. There's also old ones. People, if you've been to what they call Las Vegas, which is old Las Vegas, which is they call it now, everybody's probably been to like Fremont Street. Fremont Street Hotel is owned by Boyd's, which is a great company. In fact, it's a company that for many years Warren Buffett invested in because it was a value-based company. It trades at somewhere in the 13 to 15 price to earnings ratio and does considerably well. And when there was a downturn in the market, while it may not have made 50, 60, 70% like some of these stocks made in certain years in 2019, Boyd's made like 25%, but didn't lose 50, 60% the next year. So it was kind of churning along, and it always makes a profit. It's a well-run business.
So what is the growth rate of the sector now?
It's in between, estimates are between, like Grand View Research used to have it at like between 13 and 15%. I think it's getting harder to gauge that number because when we talk about the global market is somewhere in the range of 450 billion right now. But that's because we're adding countries here's what just happened. Interesting news globally is something like Japan, which never had casinos, just allowed a casino that's going to be built by MGM. And that's coming in the next 3 or 4 years. We had big growth. What happened when we had COVID essentially and the lockdowns in Hong Kong and Macau is that market grew. Singapore grew. There's a company called Genting that grew and is growing that Singapore market. So we're getting huge growth in Korea, Philippines, all those Asian countries that are expanding now into this space. So, and now we're getting South America. We have UAE, Arab Emirates that's adding casinos. So you're getting them not only in the U.S., but you're getting them globally too. And that's one of the things you can get exposure to in my fund because you can't really trade a lot of these stocks that are globally. You'd have to have a special account, and most people wouldn't want to pay the cost to trade globally.
Well, how many companies are engaged in it worldwide, if you could guess?
Wow. I mean, there's got to be with all the tickers all over the world, it's got to be 150. But I would tell you, it should be larger. But what's happened is because the market's been so terrible for IPOs, 2019, 2020, we were having, 1 to 2 companies a month that were in this space or associated or affiliated, whether they be a pay company or a software company that were going public. And now no one's going public. Essentially, there are no IPOs. And I think there'll be a bunch that will come on the marketplace probably when the Fed gets done with the rate hikes, which seems about now. I think you were getting some notifications of IPOs, not necessarily in this space. We do have the one FanDuel Flutter one, which we know is going to happen in the U.S., which will be great for our industry. But we're going to start seeing more companies probably go, with IPOs because there's people, there's companies like Instacart, that's been waiting for 3 years. So they're due to go public. So we're going to start seeing some IPOs probably in the second half of this year. And definitely in 2024.
Well, great. Well, aside from the IPO situation, what are the challenges in the sports betting space?
So we saw the original comment you'd hear about the challenges for these companies at the beginning was customer acquisition. And so a lot of the cost, these companies are spending a lot of money, especially somebody like DraftKings, which was a ubiquitous kind of advertising company. They were everywhere. My brother, who doesn't enjoy sports betting at all, he's more of a art and musician type person. And he's like, well, who's this DraftKings? And I thought if it reached my brother John, maybe they're doing too much advertising. That was one of the challenges initially, was getting people on their platforms. But what they've done now is strategic partnerships. You'll see almost every single team that it has a professional, as a professional team, they'll have some kind of a license with these companies, either FanDuel, DraftKings, BetMGM, one of them. Now, if their states are legalized, they'll probably have a kiosk. In Wrigley Field, they're building one for DraftKings that's open. I think it's opening in the next couple of months. They've been working on it. And every stadium, Arizona has them. Cleveland Browns did their own deal. All these stadiums where gambling's legalized, it's becoming wide open, and they're doing these partnerships. So they're giving up a little bit of the gain, but they're also getting this customer base that they maybe wouldn't have been able to access at the cost. You'll see Texas, Hal. I know you're in Texas, in that area.
We are in Texas, and we're having a discussion about the regulatory issue of it today.
Right, I know it got to the. I guess the governor general's block. Somebody says they're going to stand in the way of it. I know that most of the teams. I'd read this story this week. I know that they had passed it for the initial vote, but they say that they're going to block it. I know that all the professional sports teams, obviously, it's bread and butter for them. They want it. I know that there's a deal kind of in place pending with Mark Cuban and the Mavericks to build, with Las Vegas Sands, who used to be a company that did most of their business in Macau, but they realized that was not a great idea, and they wanted to differentiate after what's happened there. So now they have a deal in place with Cuban to build a stadium and a park and a resort and luxury hotel there in Texas when that happens. So we might not get it this term. We'll see, but pressures build, and there's a lot of money at stake and a lot of big voting dollars, I would say, in Texas.
Well, aside from Texas, do you see regulatory as an issue? In
terms of what? I think these companies, one of the things these companies do, is they do a good job. Are you talking about like regulatory from like compliance and policing, self-policing, or are we talking about just regulatory getting it passed in certain places?
Compliance and leasing, it seems like it's holding back the industry in some cases, but or maybe it's not. What's your take?
I think they're doing a great job. I think the licenses are on the line. I think they punish bad actors, and I think they punish them pretty quickly. One of the things that the industry has now, because it's not in dark places and dark hallways, and this is something people need to understand, is, I try to go and explain to institutions why there should be a mandate. That's what my goal is. And one of the things it has this dark underbelly concept. It's not. The data that they have now is so perfected because it's all online or computerized that they know bad actors. They know when there's a problem gambler. They go and search them out and they say, look, we can't let you be on our platform because we know that, based on your profile, you're overrunning where you should be. And a lot of that has to do with this data move in terms of, taking AI and being able to figure out where there's people who maybe are betting $10,000 a game and they should probably be betting $100. And they'll search those people out. And it's very hard, I think, with the way that it's all centralized and everything's tied together these days, to have people really abusing the system. And they're worried about losing licenses. When you're paying tens of millions of dollars to put licenses in place, they're not going to want to lose those for that revenue. And they don't. And so I think they do a very good job of policing it. And I think education is a mandate. And I think that the education that's around gambling is present everywhere you see it. I stay at, MGM hotels when I travel, generally to Vegas, because, that's something I've been with them for a long time. But there's lots of information on problem gambling everywhere you look in terms of that, whether it's in the sports book or in the casino itself. And I think the industry needs to police itself and has done a good job of it so far.
Great. Well, you mentioned AI, and that's one thing that came to mind is, what is the impact of AI on the sports betting space?
When people talk to me all the time, and I built software for a long time. So when you think about the apps that are on these phones, something like, Salesforce, a huge company, maybe not the huge whole version of Salesforce, but I could probably create, because I've created enterprise software, I could probably create Salesforce in 3 to 5, 6 months. To create an app for the sports betting space with the complexity they have in it, it's a year plus. These are complex apps, complex technology, from things like geofencing to legislative issues, and the AI that's involved in like these real-time data bets where, if you're up in a bet, the AI will tell it, it'll say, look, at this point, you should cash that bet out for 70% of the bet. They have all this live betting action. These are very complex apps. They've been using AI in these apps for 3 to 5 years for a lot of things, for analysis, for analytics, for the real-time feeds, for the real-time decision-making involved in when you'd buy off a bet. And I think this is really, it's transformational. What you'll have is, at some point, they've laid a lot of, when investors look at it, they're like, wow, they're spending so much money on technology. But they're putting that groundwork in. And at some point, the transformation will be in the margins that they get in technology, because it always is. I think of these companies as like 1980 software companies, or hardware like Apple. That's what they are. They're nascent. And that's what I try to explain. You're really early on this. If you get it, and when I see somebody invest in it, I'm like, you're early, you're smart. This is where it is. It might take a while, but this is where the future is. It's only growing. You're not going to put this back in the barn, is the way I look at it. So yeah, they're using AI and they've been using it for years, I guess, to go back to your general question. So it's expanding in our space as well.
In what way are they actually using it? Is it on the interfacing side, or is it on the research, or is it on the odds? How exactly is it being used at this point?
All of it, pulling from other sites to make sure that they don't want to get, one of the things they're afraid of always is arbitrage. They don't want to see a site with a 4.5 line against a 3 line, looking for guys to meet the middle there. So they do that. They're pulling massive amounts of data all over all the sites to make sure that, I would always say to people who would bet, because I'd like to bet on the NFL. I mostly only bet on the NFL. Occasionally I'll bet on the NCAA tournament, but I just do it for fun. NFL, I consider myself a pretty good prognosticator. And I always tell people to look for arbitrages. Look for those situations where you might be able to get a point somewhere where someone's not onto it. That's the one way they're using AI, because they're pulling all that data so quickly now that they're getting all those lines, so that if there's any kind of depression or change in the line, they want to make sure they match it. And there's so many exotic bets now. AI is being used just for them to go over. They'll throw the periphery or the kind of the panel of what's happening in the space, and they'll say what bets might be of interest here. and they'll have a backbone of data to see so they're creating new opportunities in the space to bet with different teasers and or kind of like, it's just strange exotics that I would call it, in the space. So AI is helping them with that as well.
Great. Well, let's talk about the Inherent Wealth Fund itself. How does it fit into this sports betting landscape?
Well, so Inherent Wealth Fund's the advisory. So so I'm the advisor and the fund strategist, and Inherent Wealth Fund is my fund. So essentially, funds, all companies that manage funds, they have a management company, and that's essentially what Inherent Wealth Fund is for the space. So that's kind of how it fits in. So that's my fund that I run, and we have some private accounts. We don't do a lot of that side of the business, but we do some retail side investment, or I should say for individual investors who want different portfolios. But for the most part, we're concentrated on this ETF and potentially some other ETFs in the future that we're looking at.
That's great. So what else should we cover that we haven't?
I would just say, the space is growing. I think there's a lot of questions that people have about the space. I think that the organizations themselves are doing a great job with compliance. And I think there's a lot of opportunity in the space. I think we have 32 states that have some form of legalization, whether that's kiosk, online, or in person. We have the big states. California missed it, which was a bummer, but the tribes are huge. When we talk about the sports betting marketplace, when Macau gets back up to speed, it'll do somewhere between 13 and 15 billion a year. It's getting closer to doing about 2/3 of what they used to do. Vegas does about 13 billion. California alone, the tribes in California do 12 to 13 billion annually. And so they're powerful. So it's going to be hard to get into California alone. But the big catalyst states that are coming up, of course, we still want. California has the same kind of problems that Florida does, because Florida has the tribes as well, and they're well established there. Texas is wide open. It's just going to be what happens with the governor and when it gets through, because Texas is going to be in wide open territory. I think there's one reservation in Texas that has a small casino. In California, you have 73 tribes. I think 71 of them have operations. So, they're not going to let them run over them. These are smart business people. We think of the history of, the Native Americans or the Indians, and we think of it in a kind of way that we took advantage of them. These are smart people. They did a great job knocking out the outside proprietors when they tried to pass it last time. And they have the loyalty of the politicians, to be honest, and the loyalty of the newspapers. And those are the things that get these things passed.
Well, that's great. Appreciate you sharing that information with us. How best for listeners to get back in touch with you?
Yeah, you can either Google me, Jeffrey Kamys, or Inherent Wealth Fund, or look up the iBet Sports Betting and Gaming ETF, and that's the fund that we're running and that we've been talking about.
Great. We'll put that in the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
Love to. Thanks a lot. And thank your audience for listening.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.